Good day traders, Stacey Burke from Stacey Burke Trading. Today we're going to be reviewing the higher time frames and understanding simple buying and selling models and opportunities, coming back to just reinforcing the basics, simple, reproducible, and scalable trade setups. And if we go to and look at a monthly bar chart representing the days of the month, but when we have our month printing as a monthly candle, that essentially will have an open in an up month, a low, a high, and a closing price representing the month by the time that month has traded. Now, in simple terms, when we have a month that closes as this type of bar chart, essentially we're going to, at some point when we go down, have a first green day potential trade setup opportunity or a bias after that low of month is locked in place. And as this month is trending, we potentially may have low of day buying opportunities on the way to completing this high of month opportunity. Now, in some cases, we may actually, at the end of the month or near the end of the month, also have a first red day, which locks in the extreme. Now, not always, because we can have a month that may just go up and put a high in place and fade back and close. And same thing with first green day. But once we have a thesis in place that the low of month may be locked in, even though we may not get a first green day trade, we may have carry through that follows throughout the month, giving us low of day buying opportunities. Now we're talking about some basic things here today. 3-day setups, 3 session setups, 3 days of longs, 3 days of shorts, first red day, first green day, the inside day. But most importantly, the emphasis in this video is understanding the higher time frames and some exercises for traders to walk through their daily charts, having a basket of a few currencies, some indexes, some metals, energies, whatever that is, and just being able to track them on the daily time frame to identify signal days, first red day, first green day, in a new month, new timing cycle, inside days, for potentially trapping traders or continuation trades in strongly trending markets. Now, what's happened with a lot of traders is they've gotten caught up in minutia, measuring little gaps and sweeps on 1-minute charts and all kinds of things, but they're missing the higher time frame and they're trading in lower probability conditions because they're counter trending the higher time frame bias. And so when we look at the daily time frame, which is where all of these setups come from in the playbook, it helps you align with the highest probability opportunities. As an example, we can look at the British pound and we can see a couple of months where the month has opened up inside of a previous monthly range, and the market has given a first green day signal. Bit of homework for you to go through your daily charts to reinforce this simple concept so that you can develop the higher time frame bias, is walk yourself through the month day by day and identify days where the low of day is broken. These are signals potentially now in markets that are trending strongly. When we get that consistent day after day, higher highs, higher lows with no breaks of daily levels until we get up near the high of month. Now, the problem for most retail traders is that they're constantly trying to sell the high. They're selling the high on smaller time frames in a market that's actually trading higher. The market breaks out and we make lower lows into the extreme before giving a first red day, potentially now locking in the high of month. Now, a lot of traders miss this because they're on smaller time frames, marking up little bars and levels everywhere and constantly trying to catch the extreme, trading against the higher time frame until that bias shifts. And then, of course, they're giving you the low of day buy on the way down. And retail is buying the lows in a market that's now falling. Why is that? I don't know. It's because they're constantly trying to catch the low or catch the high. But you'll notice when a market's trending, they're only actually giving you one side of the trade to take until we see the counter trend days. And then we get to the extreme, and of course traders are trying to buy the low in a market that's going up, but now the market's reversing back in the other direction. and they miss the opportunities for the all-in trades that are going back the other way. So if traders take some time and walk through your daily charts, you'll recognize months that are in trading ranges, trading back just in a narrow, choppy range back and forth inside of a previous monthly range. But they can still offer us single-day trade setup opportunities if you understand which setup you're hunting. And then having a basket to identify which instruments each month may be trending, so we can look for trend trade opportunities. Potentially, if you're in an uptrend, a buy low opportunity in the session that you're trading. Or if we're now trading in the opposite direction, a sell high opportunity in a market that is breaking down. We got a new month, a new timing cycle, and of course, we can look for opportunities in that first green day or first red day direction. And if you're following 5 or 6 different instruments, looking for the cleanest or the best setup in the session that you're trading. Now, one of the things that we've talked about recently is actually having a setup that you understand and that you're looking for, and not just trying to catch extremes. So if we have a market that is trading in Asia, or we have a market that you're following and you're looking for your long setup in the London or the US session, we've looked at different setup opportunities in the ACB Masterclass, as well as just looking at the first green day, first red day, or 3 days of breakout traders in the markets for which type of setups that you're hunting. We can have our setup happening in our London window for traders, whether that's a currency, an index, a metal, or an energy. But understanding that if you have a buy setup and you have that underlying higher time frame thesis, you're looking for your setup in your session regardless of the type of instrument you're looking through the basket for, which one has your setup. And as the month plays out, that setup may show up in another session throughout the month in a different week. It may even show up successively following that instrument through if it's a strongly trending market. Now, I've talked about Peter Brandt classical charting. We have just simple ascending triangle patterns in the sessions that we're trading for continuation trades, keeping things simple, repeatable, and scalable. We've talked about Monday, Tuesday, Wednesday, day 1, day 2, day 3, and Wednesday resetting as the midpoint range of the week, and forming day 1, day 2, day 3 into the closing range of the week. So the same process applies that we just looked at, where a market will open, trade lower, trade higher, and then close out, whether that's a month or a week. Not trading in front of major red news, but recognizing a market that has closed in breakout on a Thursday, heading into non-farm payrolls Friday, where we've had successive buying opportunities in different sessions in a market that is now in the monthly cycle, trading in the long direction. Now, as we start our new week after non-farm payrolls, we take out low of day levels in a market that's been trading and trending higher. We have our low of day closing out on a Tuesday. Now, traders are looking for the buy low opportunity, but this is what happens. They follow this. They're trying to buy low on the day, and then they miss the trade continuation in the long direction. Day 3 on a Wednesday on the front side of a week, whether that be in the Asian session. So we have a first green day in the new week in an uptrending market for Asia session traders. We have the continuation trade in the London window for that trade. So let's go back for a second. We start our new week, and these are the first low of day daily levels that have been broken. And traders are trying to catch the low, but we get the coiled market follow through for the continuation day 3, day 1, day 2, day 3, first green day in a new week in an uptrending market. And that continuation, and again, major red news, CPI, and then we trade back to a low of day level. So following through on the higher time frame, these are counter trend days in a strongly trending market. Again, our Asia session traders have the opportunity now for the buy low in a market that has been trading higher in our monthly cycle. buy low in a market that is trading higher highs, higher lows in a trending market in our monthly cycle, in a market that is closing in breakout. Again, new week, new timing cycle, our Monday following this through. And simple geometrical structures are rectangles and ascending triangles, first green days, for continuation trades in the long direction. Continuation trades in the long direction. Now remember what we said, we're looking at a month now that could be trending, and so we're looking after our thesis is in place that this is now indeed a market making higher highs and higher lows. We're looking for low of day or low of session buying opportunities in that month, week 1, week 2, week 3. And as we get into our later in the month, or even if we were to have a first red day signal, stay in line with that higher time frame thesis. Now, what often happens is that retail gets outside of a daily level and they're trying to counter trend it and catch the high. They're counter trending a higher time frame in a market that continues to make higher highs and higher lows, closing in breakout, indicating a potential strongly trending market as we head into our third trading week. And again, just simple classical charting, geometrical rectangles, ascending triangles in a market that continues to trade higher, blowing off potentially now into an extreme. On a Wednesday, day 3, week 3, heading into now the backside of the month. We have traders trading inside on an inside day, trying to buy lows and catch highs in a market that is in breakout long. Now remember, if we're in breakout long, we're looking for a low of day, low of session buying opportunity. But that doesn't mean we're trying to trade on a low probability day. We're looking for one of the daily levels, low of day levels, to give us a buying opportunity. Now, as we head into our third week, we have a market that is breaking low of day levels. And we may now potentially have a first red day in place. Market that has blown off and made a peak formation high first. Now remember, we had an inside day on this previous day. As a result of that, we have breakout traders now triggered into the market on the break of the inside day at the high of the month. So we have breakout traders in the market breaking out of the high of month, the inside day, closing as a first red day, and now we're in a market that is breaking daily low of day levels. Now remember, what we're doing is we're walking through the daily chart. We're just using a smaller time frame. And the point is to emphasize to traders, if you're going to sell high, the only time I want to be selling high is at the high of the month. And potentially in this particular case, we're in the third week. We're in the third week of the month, week 1, week 2, week 3. And now we have a first red day. And this is the first time we're breaking low of day levels. Now, coming back to a couple things, we're just looking at the higher time frames. We're not even looking at what setup you're hunting. But this is where traders get caught. They're trying to catch lows now in a market that is potentially now flipping the book and rolling over. They're trying to catch the low in a market that is now potentially going to be trading lower. Now, we don't know this, but we know that low of day levels are broken. Now, if we're trading lower, we want to be looking for a high of day shorting opportunity after our first red day signal. So I'm trying to shift traders' thinking from I caught the low yesterday to actually which setup are you hunting, and looking for the higher time frame opportunity. Now we have a sell high opportunity heading into our Asia Europe Open, and that market then breaks out and reverses from an extreme. And when we have a day that breaks both daily sides of the daily high of day, low of day levels, we now have what's called an outside day. And often an outside day can be a signal day for a potential change in direction. Now remember, if we just scroll back a couple of days, we had our first red day signal. We can put our high of month level across. And this is all about understanding the higher time frames. We'll go back and look at the monthly chart again, the daily chart over the course of the month. But the importance of a couple of things. Number one, understanding not just trying to counter trend the higher time frame underlying bias. And number two, which setup are you hunting? So if you're hunting buying setups, if you are a trend trader and you like to buy, which buy setup are you hunting? Well, obviously we have low of day, coiled market, buying setups. And we talked about Linda Bradford Raschke. You only need one pattern to make a living at trading. The problem is traders are trying to constantly just sell high and buy low, but they actually don't have an actual setup. So as a market continues to break down now, we've broken out on our outside day. We've triggered low of day levels. Now, lower lows is an indication potentially of a pump and dump setup. A pump and dump setup over the higher time frames. We're breaking down. We're making lower lows now as we head into the last trading week of the month. Now, I'm going to go to the hourly chart for a moment to give traders the bigger picture perspective. So understand that time frame has nothing to do with it. It's whether or not you have a setup. And then it's what level are you trading from. So we've made lower lows. So let's go back and just understand what's happened. We've got a market now making lower daily levels. Lower daily levels. We're heading into the last trading week of the month. This is a Wednesday right here. Wednesday, Thursday, Friday, closing in breakout. Closing in breakout in a market that has broken down and made lower daily lows. And we close in breakout on a Friday, which brings up this pair on our watch list. It's closed in breakout. But then we have another outside day on our Monday, a market that closes and is broken both the high of day level from Friday as well as the low of day level, making that a first red day. Lower lows, an inside day. We've triggered breakout traders in the market, breakout traders in the market long, and then we get a first red day and an outside day. Now we're heading into the last 3 trading days of the month. So remember, we're looking at a monthly cycle, and then instruments that offer us the setups in the session that we're trading in line with that higher time frame thesis. Tuesday, day 2, we get lower lows again. Lower lows again. Tuesday, day 2 on the front side typically expands the range. And now we get a big vertical pump candle in a market that has given us a first red day and lower lows, now potentially heading into the backside of a larger pump and dump template. Now on day 3, we're looking for 2 types of trade opportunities if indeed an instrument sets up, either reversal trades or trend trades. We're making lower lows. The pump and dump is the continuation opportunity in a market that is blowing off now in the direction of the trend. Lower highs, lower lows over the higher time frame after our first red day thesis at the extreme of the month has potentially now been put in place. A market that is broken down. We've triggered buying breakout traders into the market on the break of the inside day, bringing that across, and then we're pumping back up after making lower lows on the front side of a new week, heading into our day 3, Wednesday, on the last trading day of the month. Now this just happens to be an FOMC Wednesday. Now the whole point of this exercise is for traders to walk through their basket of instruments and understand the higher time frame bias to identify the best trade setup opportunities, not to read a market, but to not be counter trending the higher time frame because you can catch the high or catch the low. The question I'm always asking, and you've heard me say this several times, is which setup are you hunting? And we understand that if your setup presents, how you will execute it and understanding how to manage, enter, exit, and manage the trade if indeed it requires any management. Now, on an FOMC Wednesday, this is going to be lock in the money because it's going to potentially have high impact major red news. And if that's the case, we have a range expansion profit target we can project for 100% expansion of a range to lock in the money. If this was a non-FOMC Wednesday, this would be a hold till close trade setup opportunity. Now, the most important part is understanding what setup you're looking for. Then this will make sense because it's not about, oh, it looks good in hindsight. But when you're hunting this setup because it's scalable, then the understanding of day 1, day 2, day 3 makes sense. Monday, Tuesday, Wednesday, then reset. Wednesday's a reset day, the midpoint range of the week. These are the setups that we're hunting. But when we're trading in the higher time frame, on the way to identifying these opportunities, catching the high or catching the low isn't going to deliver the scalable opportunity. And if you're taking these trades in front of high impact major red news, that's very, very risky. So walking back through the daily chart in a monthly cycle helps us identify staying in line with that higher time frame thesis. So if a market's already left the station with a sell high opportunity, or there's high impact major red news, looking at different instruments, but recognizing when we do get markets that break daily levels, do they indeed realign with that higher time frame underlying monthly bias? And when a new month starts, do we have a signal day? And if we have a signal day and you're trying to catch the high against a market that continues to trade higher, that's how traders can blow up their trading accounts. However, when we get counter trend days, we may now be able to realign our thesis with the higher time frame if we're looking for buy low opportunities. Again, counter trend days helping us identify staying in line with higher time frames. There's a time to be buying low and a time to be selling high. And when we get towards the middle or an end of a month and we get another signal day, do we have opportunities that align with that higher time frame thesis? So just catching lows and catching highs may not be delivering the trade results that we're after. And then recognizing, again, new month, new timing cycle. We could have non-farm payrolls. We can have high impact major red news that changes that thesis again. Breakouts, one-day counter trends for potentially realigning ourselves with a higher time frame thesis. New month, new timing cycle. Month trades down first inside of a monthly range. We may be looking for a first green day. Now understand, this could be a non-farm payrolls, but now we have low of day opportunities realigning us with a market that continues to trade higher. Higher highs, higher lows, new month, new timing cycle, first red day. Now the whole point is to be able to align ourselves with the instruments that are offering us the best setup. So we can follow 4 or 5 instruments, and which one is actually offering us a setup. So we can see a market new month, new timing cycle trading down again, trading down 1, 2, 3 lower closes and an inside day. First green day, we may now be trading back in the long direction towards the high of the month level. We traded down first before breaking any monthly levels. Trading down and then coiling sideways, first green day, we may now have a market where we're looking for low of session, low of day buying opportunities if indeed they present. They may not present, but recognizing we don't want to be just trying to catch the high now in a market that's actually trading back up. New month, new timing cycle. First green day, a market that closes in breakout. We may now want to keep our long thesis in place. A low of day buying opportunity may present in the session that we're trading. So just trying to sell high puts traders, and they say, well, it didn't work. Except there's no setup. There's actually no setup. But if they were paying attention to the levels, they would recognize the low of day buying opportunity may have presented in the session that they were trading in. Now, if we go to a 15-minute chart, we can follow this across and understand that, we may have had an opportunity, but high impact major red news may have prevented us from being in those trades. But if we follow this pair now across, we can see that CPI would have affected us from getting in on an opportunity to continue that long trade bias on the higher time frame. And then we get into a new week, new timing cycle. Now, this is an example where I talk about when a market blows off in Asia or London, it still has the potential for reversing, which is why they're not ACBs. ACBs are 3-session setups typically in the New York session. And when it leaves in the New York session, it has the highest potential of not coming back, which is why entry, stop loss, and walking away. they have the potential to trade to the close. But we have another low of day level broken in a market that continues to trade higher highs, and that's our low of day level broken. We break high of day levels. We're still trading higher, closing in breakout, ranging. So again, which setup are you hunting? It doesn't mean we're trying to catch the high or catch the low. Let's go back and look at this again. We have a market that closed in breakout and coiled sideways. Setup for Asia session traders. When markets are trading back and forth and ranging, question I have for traders is, which setup are you hunting? Or are you just catching highs and catching lows? Volatility, major red news, market closing in breakout, continuing to trade higher. Higher highs, higher lows. Traders are trying to catch the high in a market that's still trading higher. Still trading higher. Obviously, high impact major red news in the London session, a Bank of Japan press conference. And we're getting to the last couple days of the trading month. New week, new timing cycle. It's a Monday, blowing off to the extreme. It's the high of month. Market blows off and reverses. Huge reversal. This is a 15-minute time frame, and it closes as a first red day. First red day. Now, remember what we're doing here. We're looking at smaller time frame, but we're looking at the daily levels to understand the higher time frame, and then also recognize, is there actually a setup in the session that you're trading in a market that's trending, not trying to catch the highs in a market that's trading higher. We're looking for low of day opportunities or a reversal setup if indeed it presents. Now we're closing out the month, the last couple trading days of the month. We have a first red day signal at the extreme. That's the high of month. We have an inside day. Now you should be able to walk through any instrument and have that underlying thesis, whether it's a down closing month or an up closing month, or if you're in a sideways trading range, and then actually walking through your daily charts in the sessions that you're trading, recognizing even if whether or not there's a setup. And the whole point is for traders not to constantly just be trying to catch highs and catch lows. And I say this all the time, every trader has the same information. There's no secrets. It's a lot of traders are looking constantly just to catch highs and catch lows, but they're not actually hunting a setup. Now, we talked about this in the last couple of videos. Which setup are you hunting? And understanding how, where, why that can present on any market, whether that's in the Asian session, whether that's in the US session, or whether that's in the London session. And it doesn't matter what instrument you're trading or which session you're trading. Which setup are you hunting? Which scalable, repeatable, rinse and repeat opportunity are you hunting? My recommendation for you for homework is to go and study your daily time frame charts. Understand the new month, new timing cycle, the bias, if there is any underlying bias, and then recognizing first red day, first green day opportunities, markets that are in breakout, inside days, and then whether or not you have a setup in the session that you're trading on one of the instruments in your basket for the setup that you're hunting. Keep things simple, traders. Master the daily time frame, master the setup that you're hunting, and in between, sit on your hands and don't engage in any degenerate, self-sabotaging behaviors. Stick to hunting setups where you have the edge in your favor. Have a great day, and may the markets go with you.